All right, let's dive right in. Today, we're getting into the fascinating world of Israeli real estate. We're going to break down exactly how a property's value is calculated in what is truly one of the most unique markets on the planet. So, let's get to it. It's the million-dollar or maybe multi-million shekel question, right? You see an apartment in Tel Aviv, what is it really worth? The answer, as you can probably guess, is way more complicated than just the asking price. It's a mix of hard data, expert judgment, and just that local, on-the-ground know-how. It's part science, and you'll see it's also a whole lot of art. Okay, so before we can even begin to understand how a single property is valued, you have to understand the market itself. And Israel's market is, well, it's famous for being incredibly resilient. It stands firm when other global markets have completely stumbled. But why? What is it that makes this place so different?
Just take a look at this. Between 2008 and 2018, a decade that, let's not forget, included the massive global financial crisis, house prices in Israel didn't just stay steady. No, they shot up by a whopping 120%. This wasn't some random blip on the radar. This is a clear signal of the market's incredible fundamental strength.
So what's going on here? What's the secret sauce? Well, for one, it's not a bunch of foreign speculators. Over 82% of buyers are actually locals, which creates this intense domestic demand. Then, you combine that with a simple fact. There's very limited land and housing supply. Throw in a booming tech sector that makes up 18% of the GDP and a culture that deeply, deeply values homeownership, and, well, you've got the perfect storm for a really strong, stable market.
Okay, so now that we have that market context, how does a professional actually pin a number on a property? While the market itself is unique, a lot of the tools they use are pretty universal. So let's get into the science behind the numbers.
First thing you need to know is something called net operating income, or NOI. Think of this as the property's pure, unadulterated profit from its day-to-day operations. You just take all the rent you'd collect in a year, and then you subtract all the costs to run the building. Insurance, repairs, management fees. What's left is your NOI. It's a really clean number that shows you what the asset itself is earning. Next up, we've got the cap rate. So if NOI is the raw amount of profit, the cap rate tells you what that profit means as a percentage return on your investment. The easiest way to think about it is like the yield on a bond. It lets you compare different properties apples to apples. And here's the key. A lower cap rate usually means a higher property value, and vice versa. It's an absolutely essential metric.
So you might be asking, how do you find the right cap rate for a specific property? Well, professionals use a technique called the market extraction method. It's a super practical, real-world approach. Step 1, find similar properties that sold recently. Step 2, figure out their average cap rate based on their income and sale price. And then Step 3, you apply that rate to your property. It keeps the whole valuation process grounded in what's actually happening in the market right now.
But, and this is a big but, here's where things get really interesting. Those formulas and methods, they give you a fantastic starting point. But in Israel, that's maybe half the story. Now we move from the pure science to the art of valuation, that local knowledge that really defines a property's true worth.
I love this quote. It's just fascinating. Think about what it's saying. So much of the real expertise here isn't written down in some textbook. It's a craft, something passed down from a mentor to an apprentice. It's all about knowing the history of one particular street or understanding the subtle shifts in a neighborhood. The kind of insight a spreadsheet is just never going to give you.
And that right there is why there's a massive difference between some online estimate and a proper professional valuation. Sure, an online tool can give you a ballpark figure, but it could have an error margin of 10% or even more. A certified valuer, a Shammai Mecker Keen, on the other hand, provides a legally recognized valuation. They have access to official tax data, and you absolutely need their report for any mortgage or legal issue. It's no contest.
Okay, so you've got a valuation. Fantastic. But that's not the final number you'll pay. Not even close. The total cost to actually buy a property in Israel includes some pretty significant taxes and fees. We have to break these down.
The really big one is the purchase tax, or mas richisha. And with this tax, who you are makes all the difference in the world. Look at this. An Israeli resident who's buying their only home pays zero tax on that first big chunk of the value. But a foreign resident or an investor, they get hit with a hefty 8% from the very first shekel. This is a huge, huge cost that you have to factor into your budget.
And believe it or not, the costs don't stop there.
You also have to budget for a whole team of professionals. You can expect to pay around 1.5 to 2% for a real estate agent and another 0.5 to 1.5% for a lawyer. On top of that, you've got variable costs for a mortgage consultant and a property inspection. It all adds up for sure.
So, let's recap. We've looked at the incredibly strong market, the financial science, the local art, and all those hidden costs. Now let's pull all of these different threads together and try to get to our final answer on what a property is truly worth. So, here it is, the bottom line. A property's value in Israel isn't just some single number you can look up. It's a whole comprehensive picture. It's a blend of those powerful market forces, solid financial metrics like NOI and cap rate, the absolutely essential expertise of local valuers, and of course, all those mandatory taxes and fees you have to pay. And that kind of leaves us with one last big question to think about. After all the calculations are done, all the analysis is finished, in a market this strong, this localized, driven by such intense demand and such limited supply, is the true value, at the end of the day, simply what the next person in line is willing to pay? It really is the ultimate tug of war between objective data and the simple, powerful force of human desire.